Welcome to the AI for Career Success video overview by Curt Robbins, where we help you get smarter than your competition. For years, the story of the electric vehicle market was really the story of one company, Tesla. But the landscape is now shifting in a truly dramatic way. Today, we're going to break down this major power shift, drawing on recent analysis published on January 2, 2026, from experts like Jay Tomasi and Dr. Saleh ASRM.
For the better part of a decade, the terms electric vehicle and Tesla were practically synonymous. But in 2025, that narrative was completely upended. The long-reigning leader was officially overtaken, and the new leader is the Chinese automaker BYD. And make no mistake, this wasn't just a minor reshuffling. This was a fundamental redefinition of who leads the EV market.
And really, the numbers speak for themselves. Looking at the full year for 2025, BYD delivered 2.26 million pure electric vehicles. In that same period, Tesla delivered 1.64 million. That's a difference of over 600,000 cars. That's not a small gap. It's a decisive lead that cements BYD's new position as the global volume leader.
Okay, so the big question is, how did we get here? To really understand BYD's rise, we first have to look at the other side of the coin and analyze what was a very challenging year for Tesla. Let's dig into the anatomy of their slowdown. As you can see from the data, Tesla's annual deliveries took a noticeable hit. They fell from 1.79 million in 2024 down to 1.64 million in 2025. Now that represents an 8.6% decline. But what's perhaps more telling is that this marked the second consecutive year of falling sales, which is a stark reversal for a company that was once defined by its explosive growth.
So what was driving this slump? Well, analysts point to a confluence of factors all hitting at once. First, competition is just getting fierce. It's not just BYD. Established automakers globally are now serious players. Second, Tesla's product lineup is frankly aging, and it's doing so without a major refresh. Third, in the US, the loss of key federal tax credits made their cars significantly more expensive for many buyers. And finally, it's hard to ignore the brand damage and other public headwinds the company has faced.
And the situation actually seemed to worsen as the year progressed. In the final quarter of 2025, deliveries plunged by 16% compared to the same period the year before, falling well short of what analysts were predicting. This wasn't just one difficult quarter. It was a clear signal that the downward trend was accelerating.
So, while Tesla was navigating these struggles, what was BYD doing? Let's flip the coin and examine the BYD advantage. They were executing a strategy that was perfectly designed to dominate the market as it exists right now.
BYD's entire success is built on a philosophy you could call manufacturing economics. Now, what is that? It's a business model that is laser-focused on growth through sheer physical scale, controlling its own supply chain via vertical integration, and using those strengths to achieve mass market affordability. This approach really breaks down into four strategic pillars. First, BYD achieved a production scale that Tesla simply couldn't match in 2025. Second, it has maintained an incredible price discipline, which makes its models affordable to a much wider audience. A huge part of this is their deep vertical integration. For instance, they make their own batteries, which gives them immense control over costs. And finally, they've aligned themselves very effectively with government policies in China and other key markets.
Faced with these manufacturing realities and sales challenges, Tesla has initiated a dramatic strategic pivot. The company is shifting its focus away from a pure volume sales game and toward what can only be described as an all-in bet on an autonomous future, centered on the concept of robotaxis.
This represents a fundamental move toward what analysts are calling software economics. In this model, the goal isn't just to sell a car once. The real objective is to build a vast network of autonomous vehicles that generate high-margin, recurring revenue through AI-driven services. Here, growth is driven by software and network effects, not just by selling more hardware.
And this is where the stakes become incredibly high. As Dr. Saleh ASRM notes, the robotaxi strategy is binary. It's an all-or-nothing proposition. Either it works at a massive scale and completely changes transportation as we know it, or it fails. There's no middle ground, no partial success that can justify the kind of valuation assumptions that have been built around this idea.
And this is the critical point to grasp. The focus on robotaxis isn't comparable to launching a new car model. It's an attempt at a complete, fundamental transition of the entire business model, moving away from selling hardware towards selling autonomous mobility as a service.
This really highlights the core strategic difference between the two companies. BYD is winning the market right now with a proven manufacturing strategy.
It doesn't need to take a high-risk technological leap to succeed. For Tesla, however, as its core auto business contracts, this robotaxi gamble is looking less like a choice and more like a necessity.
So what we're witnessing is a fascinating conflict for the future of the auto industry. It's truly a tale of two very different competing philosophies for how to achieve market leadership. When you boil it all down, the contrast is stark. BYD is focused on winning the present. It's playing a game of scale, affordability, and manufacturing excellence. Tesla, on the other hand, is asking investors in the market to look past its current challenges and bet everything on a high-risk, high-reward technological future. And this brings us to the critical question now facing the market. The debate is no longer simply about who can build a better EV. It's about strategy and it's about timing. For Tesla, the question is simple yet profound. How long can the promise of the future carry the weight of the present? Thank you for watching. This is where we teach you AI and help you get smarter than your competition. We encourage you to subscribe to the AI for Career Success YouTube channel. Please like, comment, and share this video to help us reach a wider audience.